Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please, a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of which relied upon as any form of personal advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of which relied upon as any form of advice at all. It's just general in nature only. Huge week in terms of where we now sit, and the whole idea around inflation, the idea of price stability, was not given last week at all, and unlikely to be given this week when we get the remaining central banks around the world presenting. Why I say that, we've got to look at the Fed, and the Fed first and foremost. The market's original reaction was one of positiveness off the back of the idea that a 50 basis point rate hike was not as hard as some had been fearing, that the expectations of future possible 75 or more rate hikes were off the cards, that they're probably going to do 50 bips next month and the meeting after that, which are about fair, and that they started to roll off their balance sheet was all somehow seen as an idea that it was actually going to be stable, clarity, and overall understanding about where the Fed was going. He then heard from Powell that they believe that this would create a soft-ish landing of the US economy. The thing about that, and what we saw very clearly from the data, is that that's not necessarily going to be how it is. And if you have a look at the US non-farm payroll productivity for the first quarter of this year, a 7.5% decline, expectations being a decline of 6.4%, up from around about 5.5% the previous quarter. That is the fastest slowdown in productivity since 1947. Costs of wages are really strong. But it's not just that, and not my word in terms of how you look at it, it's what the Bank of England then told us around pretty much the same problem they're facing. Inflation in the UK, they forecast, will be double digit by the end of this year. They, however, expect growth to be flat. In fact, realistically, they're expecting it quarter on quarter to decline. They're actually forecasting recession in the UK. That is almost the definition of stagflation. So the market's asking very clearly and correctly, in my view, that hang on a minute, if the UK is in that same problem and they're forecasting a recession, shouldn't the States as well? And that's why you saw such a fallout of the market on Thursday last week particularly, and then it continued through on Friday. The overall conclusion out of all this, though, is that still the US dollar is king, and that needs to be put there front and center. Have a look. Euro dollar got to as low as 104, hasn't been there since 2017. Have a look at the pound, 2-year low, and dropped through 123. You then look at dollar yen. Dollar yen continues to defy all odds, making a new 20-year high at 130.1 yen. That's incredible. Then the Aussie dollar US dollar pair also threw a 2% move in the space of 24 hours and got to a low of 70.1 cents. That is also showing just how strong and how hard the market is finding things to price at the moment. And stability might be the idea long term, but stability right now just isn't being reached.